Hello traders, the title of the video is how to use Yin Yang to improve Elliott wave trading. The Yin Yang, my friend. You say, George, well, are you speaking Chinese? Well, the Yin Yang is two half, alright? And some people talk about the day and the night, all right? Hold on, please, traders. I will show you in a minute what is the yin yang, all right, and how you can, use yin yang to improve your Elliott wave trading. Previously, my friend, I counted my wave here. We are talking about the dollar, Norwegian krone, USD, NOK, USD, November Oscar Kilo, that's the US dollar, Norwegian krone. Previously, I've counted my way. I said this is the first wave, second wave, third wave, fourth wave, and the fifth wave. All right, so traders say, George, you must put numbers. All right, let's put the numbers, please. Talking about the yin yang, so talking about the day and the night, or the plus and the minus, or the left and the right, if you accept that, it means that we want to use the Elliott wave, looking at the price in a normal way, and also looking at it upside down. It also means that we want to look at the price from different angles, going into the mind of other traders to see the full reality. All right, that's what we are doing. Yes or no? In fact, here, hold on, please. This is about the yin yang. So, the simpler ways to explain to you the yin yang. Suppose, all right, you are expecting something. You are expecting to receive $100,000. All right? You believe that you should have $100,000 on a particular day. All right? If, for instance, stay with me, please. On that particular day, you are expecting your $100,000 on Monday, for instance, and you are fixated that I must get $100,000 on that day. That day, it must be on that Monday. All right? If on that day you did not get that $100,000, you will be completely disappointed. But if you are completely very, very sure that you will get it, in fact, you went to borrow money because you're expecting the money on that day, or you do all kind of transaction because of that expectation, and that Monday, and you do not receive it, you will be in fact very shocked. You'll be shocked. All right? This is something that to avoid the surprise, to avoid being shocked, to avoid the nasty surprises. Once you adopt what we call the yin-yang approach, some people say duality. All right. Say, John, you are teaching about duality. No. In fact, when we are talking about duality, all right, as a Christian, we don't believe in duality. Some people do. But our mind, human being mind, the function, the knowledge of the good and the bad, human being mind, our mind, use the yin-yang. So intellectually, when we are dealing with any intellectual matter, we can use the yin-yang. But suppose you are somebody who is applying what we call the yin-yang strategy. Now, stay with me because this is about Elliott wave. It's not about yin-yang itself. It's about how to use the approach, all right? Don't get me wrong. The approach of the yin-yang, all right, to improve Elliott wave trading. That's what I'm trying to do here. So don't run away and say, George, I'm not interested in yin-yang. Stay with us. It's not about yin yang. It's about using the principle of yin yang to improve your Elliott wave trading. And at the end of the tutorial, probably you will like this video. Suppose you are done a yin yang approach, so you say, okay, they say to you, definitely the money will be in your bank account on Monday, $100,000. But you say, all right, I'm going to adopt the yin yang approach. If I get it on Monday, I'm happy. If I don't get it on Monday, I'm happy. So you are prepared for both scenarios. There are two possibilities. You can get it or you may not get it. 50%, 50% equal probability. So now, if you adopt that yin yang approach and on Monday you did not get the money, will you be surprised? No. Will you be shocked? No. Because you know I may get it on Monday. And if I don't get it on Monday, well, I will get it probably the next day or the following day. Or you're expecting an Amazon delivery, desperate, all right, you order something very important. You have the Yin Yang approach. They say they will come Monday, 9 o'clock. Say, all right, they come 9 o'clock, good. If they don't come, good. You will not be upset, you will not be disappointed. It will not affect you one bit because you adopt what we call the Yin Yang approach. Okay, enough of my blah, blah, blah. So here we are. I'm talking about my Elliott wave count. All right. First wave, second wave, third wave, fourth wave, and the fifth wave. And I'll call here, this move here, 1, 2, 3. It's a bit messy, not very clear. Feel free to disagree with my wave count. So I say this move up during that time. Previously, I said that is probably 1, 2, 3 that is hidden. We cannot see. It's not clear. So I'm not going to force it. I'm just thinking that probably it's 1, 2, 3 that is hidden. So we're expecting a flat correction, 1, 2, 3. This is a hidden 1, 2, 3, probably, okay? And then we expect 1, 2, 3, 4, 5 move down. And the price was rotating in this channel. It's still doing that now. Is it going to break above it? Probably now. So you see, 1, 2, 3, 4, 5. Okay, is Elliott wave trader going to take it up again? We will see. But it's still hanging around there. So, all right. This is my wave count of a flat correction. So if it start going up, breaking up more, we say this is a classic flat correction, which is a very shallow flat correction. You see here, coming to the end of the A part of the flat correction. So A, B, C. A 1, 2, 3, 1, 2, 3 being hidden, and this one, okay, being 1, 2, 3, 4, 5, but it is a corrective wave. This we will come back to that, okay? So you will see, why is it 1, 2, 3, 1, 2, 3, 4, 5 in the channel, or can continue more with this, what we say, can be prolonged, you see. So we talk about A, B, C, D, E. A, B, C, D, E can be prolonged, can continue to go up and down. You say, oh, Joe, oh, yeah, you say it's going to break out. Oh, yes, continue. Yes, it can still continue to oscillate more. That's what we talked about it before. The prolongation, the price is free to do whatever the price feels to do. But the reason why I'm talking about the yin yang today is because I'll come back and I say, okay, let's go into the mind of other traders. So far, everything looks good, all right. Other traders may say, George, I don't know about your wave count. For me, I'll keep it very simple. This is the first way, George. You have to go back and learn about Elliott wave, George, okay? All right, so you say this is the first way, okay? I say this is the second way, all right? They say, yes, this is the third wave. All right? Okay, they say, George, in fact, the third wave has ended here. And the fourth wave has started during that time. And we have fourth wave. And this is the fifth wave. Somebody may say that. Do you agree? Another time may say, first wave, second wave. All right? Where are we? This move all the way up here, 1, 2, 3, 4, 5. That George, you are calling your trending fire. This is the third wave, George, you stupid boy. They say fourth wave right there. They say it's a fifth wave. George, can you see any Elliott wave violation? I said no. All right. So I compare my wave count to their wave count. No big difference. No big difference. Price was going up. I was expecting to go up here. The only difference, probably this session here. The first and second wave. Yeah. So they will be calling, so they say 1, 2, 3, 4, 5, George, this is a correction going on here. So that trader may say, George, you said yourself that when we count 1, 2, 3, 4, 5, it becomes one impulse wave of a higher degree. Yes, that trader going into his mind, talking about the yin and the yang. Or should we talk about yin yang gone, down, gone? Which means looking at various scenarios. All right. I need to learn a bit of Chinese. All right. Teach me a bit of Chinese. All right. So that trader may say, George, 1, 2, 3, 4, 5 is one first wave of a higher degree. What we are seeing now, this consolidation, is the second wave of a higher degree. So that trader may put here, I say, George, that's the black one, the higher degree, second wave, still under place. Are we going to have the third wave of a higher degree? I may turn around and say to that trader, keep your wave count, I'll stick with mine. And that's exactly what I will do. But when we are talking about how to use the yin yang to improve area weight trading, it will be completely crazy. We can be shocked, you see, this is what's going on. So you look at a wave count and you just dismiss it. You dismiss it, you say, my wave count is the best one, I don't want to know about your wave count. Sometimes traders send me email, they show me their wave count, I look at it. I don't say to them their wave count, I just tell them my wave count. If there is an Elliott wave violation, I will mention that. Yeah, there was an Elliott wave violation. But at the end of the day, that trader is not obliged to use my wave count. He or she may say that, well, I'm sticking with my wave count. But I want to, before we continue, let me pause the video for a second because I want to show you the image of the yin yang, all right? For traders who do not know what is a yin yang. All right, this is the sign of the yin yang, all right? So they are chasing each other. You see this one? The white is chasing the black one. You see, it's chasing it, all right? And the black one also chasing the white one. So it's like two things forming one thing together, all right? So the left and the right, all right? The left brain and the right hand side brain, all right? But forming one thing, which is the whole brain. You get the idea now? So this is why I'm talking about how to use the yin yang, all right, to improve your area wave trading. So as an area wave trader, the problem that we are facing, we are only sometimes using only the yin. So you count your wave, you do your own validation, you do not care about anybody else, or you didn't bother to see the higher degree wave count. You see, now that's what I say to you. See, 1, 2, 3, 4, 5. Now I call this one 1 now again. Then I'm calling this 2 now, isn't it? All right? So the continuation, sometimes they get into trouble. Now, if I quickly bring back now, this is what we are saying to traders, is it NASDAQ 100? Talking about the yin yang, okay? How to use the yin yang to improve your area weight trading. I think we are in that scenario now with people count 1, 2, 3, 4, 5 ways, all right? For the most of the indices, I think I'll bring on the Dow Jones, and they are calling for correction, all right? That's the yin. What is the yang of that? All right. So everybody's talking about correction. What kind of correction is this? For me, I say to traders that the correction that everybody is expecting is the 4th wave of a higher degree. Then we will have again the 5th wave of a higher degree. The trend that has started is not finished yet. There will be a correction, and that correction is only a 4th wave of a higher degree. That's again my yang. Somebody yin is somewhere. But if, for instance, all right, I stick to my wave count, which I can, all right? I'll stick to my wave count, but I do not want to ignore the yang if I have the yin. Or if I have the yang, I don't want to forget the yin. If I have the yin, I don't want to forget the yang. This is the point of this tutorial today. It's about helping you to develop what we call the yin yang approach area wave a trading mindset. All right. So this is what I'm trying to do here. So you may get the whole picture. So I talk about comparing your wave count to another wave count. We talk about seeing, comparing the lower degree. This is another way again. Comparing the lower degree wave count to the higher degree wave count. So come 1, 2, 3, 4, 5. Okay. Connect the dot. Where is the higher degree first wave? Where is the second degree? Where is the second wave of a higher degree? All right. So if you sometimes you can't wave, it's correct, it's valid on the monthly chart, yes, or on your hourly time frame. Now from the hourly time frame, did you go to connect the dot and say the hourly 1, 2, 3, 4, 5 is the first wave on the daily chart, or is the 1, 2, 3, 4, 5 on the daily chart is the first wave or third wave or fifth wave on the monthly chart? Connect the dot, compare the lower degree wave count to the higher degree wave count. You say an Elliott wave cycle is completed. That's the yin, all right? All right? That Elliott wave cycle can just be, all right, the yang of a higher degree, which means a first wave or third wave or so on of a higher degree. So a cycle is completed on one time frame. You see, it's clear. That's the yin or that's the yang, okay? Is it a mini cycle of a bigger cycle? Where are we in relation to the bigger cycle? Or you say that we are now in a fifth wave. All right. Is it a fifth wave of a bigger cycle? Or is it a fifth wave of a mini cycle? What is the relationship between that fifth wave and a higher degree or the bigger cycle? It goes on and on. It's infinite. So that's why sometimes we get confused a little bit and we are saying, all right, the wave forecast is wrong. All right, this guy does not know anything. All right, I made a mistake. No, you did not make a mistake. You just take a side and you stick to it and you bang on it and you say that the market will correct itself big time. All right? So now that I'm talking about this, you see, Joe, what I got to do with US dollar, Norwegian krona? That's a very good question. So again, you see here, I draw a triangle. So this is again, so we're talking about comparing your wave count to other wave count, looking at the price from different angles, seeing all the various scenarios, doing your forecast and putting it aside, comparing your forecast to other forecasts, concentrate on the price action, and so on. Compare the lower degree wave count to the higher degree wave count. You say, yo, George, it's getting a bit too much. I can't cope with you anymore. All right. You see? But all we are doing is about developing the Yin Yang mindset. What you expecting? If something else happened, how would you feel? Are you prepared? Do you have a plan B? That is the question. You're expecting a flat correction. You're expecting a zigzag. All right. You're expecting a triangle. All right. You think that ABCD has ended. What will happen if there's a prolongation? All right. Those are the things that we are talking about, the yin-yang approach to Elliott wave trading. The wave pattern can change, or the wave pattern can become complex. So sometimes people say, all right, we see a trend in first, now a zigzag pattern is completed, and everybody go on Twitter and Facebook talking about a new trend that is going to become, and everybody is going to become rich. All right. And then you see maybe X or something else or another complex wave. That's the yang of the yin. All right. Or that's the yin of the yang. All right. So now again on this chart, I draw this chart. You see there was a triangle here. I hope, because normally I should have more data than this. This is one challenge. This is it. This again the yin yang. Do I have enough data for this information? If the information that I'm looking here is not complete, I'm working with a limited data. That's another yin again. I need to take that into consideration. I don't like the fact that I only have a data from 2009 to 2018. So I'm aware that maybe this is not the full picture. So when I'm working with this information here, I need to be very, very careful because I don't have a data that cover 15 years or so or something like that. So imagine that probably there were other information here that is not on my chart. Is that a yin or is that a yang? All right? So all I'm saying is that just remember those few things that can happen that you need to be aware of, that you should take into consideration when you are using the Elliott way. I remember the first time, this is a true story, when I learned about the Fibonacci extension. All right? They told me, they are learning the theory, they told me that when a price pulled back to 38.2% Fibonacci retracement level, and it goes above the prior high, it will go to 161.8% Fibonacci extension level. That's the target. And I take it like an exact science. Now, the first time it worked beautifully. I was, I think, on 3 minutes after I went there, stop. All right, I saw the price come down. All right, and I keep, you know what? It didn't work all the time. All right, because I was just using, okay, the yin, and I forget about the yang. There are other things. So, 161.8% Fibonacci extension on the 3 minute time frame is just market noise. How about 161.8% extension on the hourly time frame, on the daily chart, on the monthly chart? You see. So here again, you see, we have that triangle there, and I'm going to do something that will open your eyes a little bit. You see that triangle, if it's true. If you are not missing more information here, all right, all right. And I use a conservative measurement like this instead of putting it all the way here and pushing it down all the way down here. I don't want to do that to set a target. I want to use, okay, this measurement because the price went to that zone, you see, and then touch this zone also here. I want to use that, okay, and project it as the height of that triangle instead of drawing it from here all the way down here. I can do both, yin yang, yes or no. I put it at the breakout point like this. That's why the price break it, boom, the triangle. That's what professionals are doing. Is that what I've done before? Sometimes I draw line, okay. Okay, so breakout, they set a target there. That's there. See that? So you are Elliott way trader, you see. So if you call this first way, second way, or whatever you do, or you count it like me, 1, 2, you know that there is a target here. All right? Can you see that? There's a target zone here, the breakout point here, and there was a midpoint target somewhere here in this zone, right there. Look what the price did later on. You see the fourth wave, if you call this fourth wave instead of my 1, 2, 3. For me, this was my 1, 2, 3. For somebody else, I want to go back to my Elliott wave count. I like my own wave count. I believe this is a flat correlation being developing here. All right. So look at this 1, 2, 3. See, that's what I was calling 1, 2, 3. Stop exactly, retest the top of that target level. Can you see that? See the tail of this candle? What I was calling. That's why I want to stick to my my wave count. It touched there, boom. Can you see that? This triangle using this conservative measurement, projecting it at the breakout point, bringing us to that red point. So as the price breaks above, it went up, went up, went up, it come back down to retest that target level. So imagine that I'm just a normal Elliott wave trader who is not using a yin yang mindset. I may not know why the price retest here, so I'll probably say this is a resistance level. But this resistance is also corresponding to a specific target level. Can you believe that? Now prior breaks above it, we project it one more time above the target. So it brings us right there. So where did so that first target allow me to see that there is a support here when I was saying 1, 2, 3. Good. Excellent. I will be happy to participate in a B wave of what I call a flat correction. So boom, 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 boom. So what am I looking for? What will be the end of my B wave of the flat correction? Look, I will be expecting it here. That's a target. I will be paying attention to that target level. So imagine, do you think it's just by chance? Oh, okay, the price just came here. There's a key level, yes. But well, look again. He respected that target again when we projected up. Look when he was pulling back. He stopped at the midpoint target. Pull back to return the midpoint target. Bounce up. Now it starts in a channel, you see. Now, you see what's going on? Now we are above the midpoint target. This is the red line here. If you are set as the midpoint target of this is the ultimate target, our second ultimate target. This was our first ultimate target. This is our second ultimate target. And the B wave of that flat correction did stop there. What's going on in the financial market? You see now? You see now? All right. So if it starts going up, it goes above this level of financial support, we know that it's a target level. It's a key level, yes or no? Like it was here. All right. So the exercise I'm doing this tutorial is just to wake you up a bit, so you may start, using Elliott wave more effectively. You may understand, why sometimes Elliott wave pattern may be distorted. So you may find the best place, to enter the trade. So you may say, oh, I see. So you go at it 1, 2, 3, 4, 5. All right. Okay. And then you take it out. Or what are you doing? So you want to know where are the key levels, where are the targets, so you may understand why the price is behaving the way it's behaving. So you see why? It came down, it's a 1, 2, 3, 4, 5. Oh, I was expecting it to be just 1, 2, 3 up. You see? But then it goes 1, 2, 3, 4, 5. You form a double bottom here. And when we say to trader, cover the double bottom if you can. If it's confusing to you, all right? So all the price did by retesting, it's just because of that midpoint target, he was confirming it, retest and validate it, and then form a double bottom, push it up. It could have gone straight up. You see? All right? And now it's going all over the place. There's another key level here. So between the midpoint target and that first ultimate target, there's another midpoint again target there. Yeah. Touch it, form again a double bottom there. From a double bottom, what's this price doing all the time? Double bottom at the midpoint target. A double bottom again here. It's going back up again. All right. So now, what should we say to traders? That's a very good question. Anytime you see a double bottom chart pattern followed by a higher low, that higher low is a higher probability trading setup. So when we see any higher low from here, we will be interested to trade it. With the price pullback to retest this level of 80368 and find a support and go out, or is it going to crash back below it and find a resistance and continue to go down? So which means the price is consolidating now. Some traders want to push it all the way here. As they are pushing it all the way here, there is a midpoint target here. There's a support here also. It forms a double bottom. Now it goes back above the prior double bottom. This is telling me that it's becoming a little bit bullish. You have this double bottom. We go below it, we form a double bottom. Now why are we going back above this double bottom here? We are in at the square one. All right. Priority to bullish signal above 803. 6.8, and prior to bear signal below that level. Understand that some people will try to sell here, and there is a consolidation going on here. And pay attention to the key level. Look for trading setup around those key levels. All right. Another thing that we can do. So, talking about the Yin Yang area way trading approach, we want to see it and be prepared from every scenario. Do all the necessary things that we're supposed to do as a technical trader. That's what I'm doing again here. Projecting that channel up. Okay. In case the price finds support on the edge right there, where is it going? That is the question. We draw the media line for that channel. We have a new green channel. Yes or no? We do. You can't deny that, even if you disagree with my wake count. Well, at least to make you laugh a bit. Okay, you see now? We have another channel somewhere there. Okay? And we just want to trade on the edge, looking for high probability trading setup or the edge of one of those lines and take it one step at a time. That's all you are doing. Alright? So do not limit yourself and have count your way. So it will be wrong for me to say 1, 2, 3, 4, 5. And then say flag only 1, 2, 3, 1, 2, 3. Say okay, 1, 2. So I say go down. 1, 2, 3. From a double bottom here. So personally I go 1, 2, 3, 4. Maybe it come down 5. It may not. It may just go to out. Okay. At the end of the day, you want to trade. Okay. So if I just stick to my wave count, all right, like I did now, I'm expecting the price to go up more. So I say 1, 2, 3, 4, 5. Good. 1, 2, 3. 1, 2, 3 hidden, forming the B part of the flag correction. Now we are in the C wave of the flag correction. It looks to me like a classic flag correction. This is my wave count. This is one viewpoint. This is the yin. Where is the yang? What other traders are paying attention to? What other traders are forecasting? What other traders are taking into consideration? Have I missed something? Here it is. By using this simple strategy here, okay, I have mapped out the chart and I'm now already. All right. So I'm not fixated on a flag correction. I'm just concentrating on the price, and I will not be surprised. I will not be surprised because I know that the price can print something out that is different from my forecast. That's the yang of my yin. So you're expecting on Monday your $100,000. If it doesn't come on Monday, you know that either will come on Tuesday, on Wednesday, or any day be okay. By the end of the week, you get your 100,000. So it doesn't come on Monday. I know that definitely this week I will get it, and I'm not surprised. So I have the yin, I have the yang. That's the yin yang. Okay, area wave trading. So many area wave traders out there, they struggle with that. They find it very difficult, all right, to have that duality approach to their area wave trading. They count the wave, it looks good, or they purchase the area wave forecast, it looks perfect. They say, George, I trust you so much. I say, please don't trust me. All right. And they say, well, if you are very sure, why can I trust you? I say, please don't trust me. Compare it to yours. Take it, all right, with the yin-yang, okay, approach. So this will conclude our discussion today about how to use the yin-yang to improve area wave trading. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you think that, Joe, this is another ridiculous garbage, mark it down. However, if you think this is an essential tutorial that can help other area wave traders, feel free to share it with your friend on Tumblr, Google Plus, Twitter, and also Facebook. If you have not yet subscribed to our channel, please subscribe to our channel today, and be sure to click on the notification bell, so anytime we record a new video, you will be the first person to be notified. If you are watching this video on Facebook, alright, or on Tumblr, or on Twitter, come and subscribe to our channel. Our channel is 24 Elliott Wave, digit 2, digit 4, Elliott Wave. Subscribe to them. It is free. If you are only watching on YouTube, check out our Facebook page. It's at stochastic-macd pages. Stochastic-macd pages, because sometimes I record video that are streamed live. So video are pre-recorded, but I stream them live using the premiere function of Facebook. So that video may appear first on Facebook. So you don't want to miss out. Check out, okay, Stochastic-macd Facebook page. Like our page and check what we are doing there. Sometimes video are posted first on Facebook before coming to YouTube. But most of the time I'm posting video first on YouTube. But you want to know, you can track me on Facebook and also on YouTube. So this is the end of this tutorial. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders, talking about how to use Yin Yang to improve in your weight training. Are you from China or any Asian country? Okay, help me to learn few words of Chinese. Okay, Yin Yang, is it night and day? Or is it left and right? All right, let me know in the comment section. Happy training to you all, and I will speak to you soon. What duality has got to do with Elliott Wave? That is the question. What is the Yin Yang mindset? Ha 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 ha.